This is good afternoon, good morning, and good evening, and thank you to all those who've tuned into the webinar from far and wide today. Welcome to the second webinar in the Low Carbon Shipping Seascape series titled Shipping's Climate Risks and Opportunities. This is a follow-on from our first webinar, March 2018, where we spent some time discussing the key issues in the run-up to the important IMO meetings in April 2018. Of course, a lot has happened since then. So this webinar will be, first, taking stock of where we are currently, where we are heading, and assessing what risks and opportunities would the future direction of travel be bringing us. Today I have a few panelists with me joining the webinar. I'm Nish Ramatullah, and I'll be chairing the session today, as well as giving a quick introduction and context of the GHG emissions in shipping. I'll then be followed by Isabelle Rojon, consultant at UMAS, our policy expert who follows the IMO GHG discussions to the nth degree. She'll be providing more details on the IMO discussions to date, specifically on the last couple of IMO meetings, looking at the regulatory outlook, the future risks and opportunities from regulations. Thereafter, Dr. Carlo Raucci, principal consultant at UMAS, who is our technologies and fuels expert, having authored several publications on this subject, including zero emission vessels. In collaboration with Lloyd's Register, will be providing a technological outlook and discussing the risks and opportunities arising from a technology perspective. And finally, Dr. Sophie Parker, principal consultant at UMAS, who leads our finance and transparency work, will be talking about the risks and opportunities from a financial standpoint, including investor-led initiatives. The session will approximately last for an hour, with presentation for around 40 minutes and about 20 minutes for question and answers. You will have the opportunity to raise questions throughout the webinar by typing in the box at the bottom right-hand corner of your screen, but be sure to select all panelists so that we can all receive the questions, and we'll pick up the questions when we finish the presentations. Also, if you'd like to use some of the content or quotes from the presentation today, please do get in touch with us and we'll be happy to assist. But just before I move on, a quick introduction to UMAS. UMAS is a sector-focused commercial advisory service that draws upon the world-leading research of UCL's Energy Institute Shipping Team, combined with the advisory expertise of MATRANS. We have about 15 staff in UMAS covering various disciplines, subject areas solely focused on GHG emissions from shipping, making UMAS the largest and the leading research group globally on this subject. Our key strengths lie in using big data to understand the trends and drivers of shipping activity and emissions, and secondly, around the use of rigorous models such as Longterm, which has had a multi-million-pound investment to date, to explore what-ifs for future policies in shipping. Our work's been used in both policy and industry through industry leadership, thought leadership pieces. Just very quickly, and a brief overview of what's happened in the last few months. It was only in April 2018 that the shipping industry first became the first international sector to have committed a sector-wide GHG target to reduce emissions by at least 50% by 2050 on 2008 levels. So the word "at least" is really important because that keeps the door open to full decarbonization by 2050. And this is important because it keeps the 1.5 degrees ambition alive, something that the island states in the IMO, including the Pacific, have stressed for. I'll leave Isabelle to go into the details of the strategy and the action plan, but at this point I just wanted to point out the tremendous outcomes that have been achieved in April 2018. And secondly, on the industry side, it's been a rapidly evolving seascape as well. Just last week, we had Maersk's announcement. As the largest shipping container, it sends an unambiguous signal not only that the future is zero emissions, but that the future is only 10 years away, as you'll hear from Carlo. This is not out of the ordinary, given that many of Maersk's customers have already adopted science-based targets. Just under 500 corporates have signed up to science-based targets, of which 50 are at least retailers, majority of the customers for Maersk, including Walmart, Tesco, Nike, and some designer brands, which only some can afford. These are increasingly demanding zero-emission GHG emissions from their suppliers, and to assure their shareholders they are positioned to survive the mounting pressures of GHG regulations and related stability threats, so that they can offer zero emissions fish, furniture, ovens, and shoes to attract more customers. Guess who will be in the front of the queue for their business? Clearly, Maersk has positioned itself well in front of the queue. Elsewhere in the supply chain, just last week, MAN Cryo, a wholly owned subsidiary of MAN Energy Solutions, became the first supplier and engine manufacturer to develop a marine liquid hydrogen fuel gas system. Also, earlier this year, MAN renamed its business from MAN Diesel and Turbo to MAN Energy Solutions to reflect a new company strategy geared towards decarbonization, with the aim that the sustainable technologies that it will be selling will become the main source of revenue by 2030. And again, 2030 being an important milestone, as we'll hear from Carlo. Both these examples show that they've been able to convert risks into opportunities. I'll hand over to Isabel now, who will delve into the details of policy and what this means for risks and opportunities that we're likely to see from regulations.
Thank you very much, Nish. Can I just check that you hear me okay?
Yes, we can hear you okay.
Thank you. I've just heard from some listeners that there's a problem with the sound. I just wanted to just mention that in case you have any issues, we of course apologize. We are recording the webinar, so we can send you the links in case you're having issues. Well, having said that, I will just start my presentation. As many of you may know, this year in April, the International Maritime Organization, which is the UN agency for shipping, has adopted the initial IMO strategy on reduction of greenhouse gas emissions from ships. Next slide, please. Thank you. And here are some of the key highlights. So the initial IMO strategy is aimed at addressing greenhouse gas emissions from international shipping, and it contains a vision statement that says that greenhouse gas emissions from international shipping should be phased out as soon as possible in this century as a matter of urgency. The initial strategy also references the Paris Agreement temperature goals and the UN Sustainable Development Goals. It also points to the reports by the IPCC, that is the Intergovernmental Panel on Climate Change, and it contains 3 levels of ambition. And I'm going to go into a bit more detail into these levels of ambition in just a second, as well as different guiding principles. And because there was a lot of discussion on the guiding principles, I just wanted to mention them. So the strategy is cognizant of both the IMO's principle of non-discrimination and no more favorable treatment, as well as of the UNFCCC's common but differentiated responsibilities and respective capabilities in light of different national circumstances. Apologies, it's a bit of a mouthful. The guiding principles also contain a requirement for all ships to give full and complete effect to implementing mandatory measures, irrespective of their flag. It very importantly says that there's a need to consider impacts on states, including on developing countries, and in particular on the least developed countries and small island developing states. It also references the need for evidence-based decision-making balanced with the precautionary approach. The initial IMO strategy furthermore lists candidate short, mid and long-term measures. And again, I'm going to go into a bit more detail on these in a second. And it contains also a commitment to the continued development of global maritime trade, whilst taking into account impacts on states. So let's move on to the levels of ambition, which are on the next slide. Okay.
Yep.
Thank you. So the first level of ambition is to decline ship carbon intensity through further EEDI improvements. The second is a carbon intensity goal, which is to reduce CO2 emissions per transport work as an average across international shipping by at least 40% by 2030, and pursuing efforts towards 70% by 2050 compared to 2008 levels. And the third one, and that's probably the one that has received the most amount of attention so far, is an absolute target, which is to reduce the total annual greenhouse gas emissions by at least 50% by 2050 compared to 2008. And whilst at first sight, these levels of ambition sound relatively clear, there are a lot of uncertainties. So for example, there's no peak year that's specified. The definition of transport work is, well, not there. So for example, one could use the AER or the EEOI, and that would affect the calculations on what's been achieved since 2008 and what more is expected by 2030 in particular. And then also there's some inconsistency between the second and the third levels of ambition in particular. And that's because the 70% carbon intensity target does not relate well with the 2050 absolute target of at least 50%. And in order for those two to be consistent, so for consistency with the 50% absolute reduction in 2050, the carbon intensity target is estimated to be 85%, so a lot higher than in the second levels of ambition. Okay, next one, please.
I'll do that.
Thank you. So what do these levels of ambition mean? And here I wanted to focus in particular on the third, the absolute level of ambition. So the graph you can see here on this slide has time on the x-axis and CO2 emissions on the y-axis. And as Nish also mentioned earlier, the initial strategy sets an emission reduction pathway of at least 50% reduction on 2008 levels by 2050. And that is the purple line here. And the strategy further includes a very strong emphasis also in the vision statement on increasing the cuts towards 100% by 2050 if this can be shown to be possible. And that is the yellow line here. And we've calculated that a 50% reduction would put shipping on course for a 2-degree pathway. But of course, we need to remember that the Paris Agreement targets well below 2 degrees Celsius and aiming for 1.5 degrees. So that means that it's really full decarbonization by mid-century, so this yellow line, that we need to follow to be aligned with a 1.5 degree pathway. But the at least 50% language of the IMO strategy leaves the door open for full decarbonization by 2050. Next slide, please. Now, speaking of 1.5 degrees, let's have a look at some different carbon intensity improvement trajectories that correspond with a 1.5 degree pathway and on how these improvements can be brought about, which is shown here on the y-axis. So overall, we can see just how fast the carbon intensity needs to change. And here the dark blue line represents business as usual. And one thing that is particularly notable is that if we are slow over the next 10 years at capturing carbon intensity improvements, then as you can see from this turquoise line, we will have to make a very rapid reduction in carbon intensity, pretty much overnight by around 2030. And the sooner we start, the more gradual and probably the least painful the trajectory that can be followed. And for improvements of up to around 50%, we can achieve that with existing fuel technology through a combination of slow steaming, increasing ship size, and efficiency improvements in design and operation. However, if we want to go beyond that, which we know we have to do, we will need very low and zero CO2 fuels. Next slide, please. Thank you. So coming back to the candidate measures that are included in the initial strategy. And here I just wanted to briefly mention that this, the list in the initial strategy is non-exhaustive. So it's possible that member states or organizations come up with different ideas as well. And with regards to the short-term measures, which are those measures that could be finalized and agreed between 2018 and 2023, there's a pretty long list of those potential candidates. And for the sake of brevity, I didn't want to go through all of them and have instead just summarized them into 3 different categories. So on the one hand, we have measures that mandate technical or design efficiency improvements. So for example, strengthening the EEDI for new ships or applying the EEDIs to existing ships. We have measures that mandate operational carbon intensity improvements. So that could, for example, be operational energy efficiency standards or speed regulation. And furthermore, measures with no mandated stringency levels, but which could help at removing market barriers. So for example, further improving the SAMP or developing and implementing national action plans. And the initial strategy also states that those measures should be prioritized that could achieve emission reductions before 2023. And in order to peak emissions imminently, which of course is important for limiting temperature rise to 1.5 degrees, and to reach the carbon intensity target of the initial strategy, we know that we need an operational energy efficiency measure. That doesn't mean that the other measures are not important. For example, the initiation of R&D into low and zero carbon fuels is going to be key if we want the shipping industry to switch to those fuels. And hence the mid and long-term measures, oh, I'm not quite there yet. Thank you. And hence the mid and long-term measures focus very much on the implementation of low and zero carbon fuels, which are going to be needed to achieve the absolute greenhouse gas reduction target in 2015. And one of the potential measures that are mentioned are so-called new or innovative emission reduction mechanisms that could include market-based measures. So what has happened since the adoption of the initial strategy, and what are the next steps? So one thing that I consider very important is the adoption of the special report on 1.5 degrees this October by the Intergovernmental Panel on Climate Change. And this report tells us that since pre-industrial times, human activities have caused approximately 1 degree of global warming. And this level of global warming is already affecting people, ecosystems, and livelihoods all around the world. And currently, at the current rate, we're going to achieve global warming. Well, achieve is the wrong word in this context, but between 2030 and 2052. And we are actually currently tracking towards a 3-degree temperature rise by 2100. The report also found that there are very clear benefits to keeping warming to 1.5 degrees Celsius compared to 2 degrees or even higher. And it's been very clear to show that every bit of warming matters, and even half a degree is critical. The report has shown that limiting warming to 1.5 degrees is not impossible, but that it would require rapid, far-reaching and unprecedented transitions in all aspects of society. And in this context, the next 10 years will be absolutely critical. And more specifically, it's shown, again, I'm not quite there. Thank you. To limit global warming to 1.5 degrees, global emissions of CO2 would need to be reduced by 45% from 2010 levels by 2030, and we would need to reach net zero around 2050. So in the context of the IMO, what that means is that we urgently need to develop and implement stringent policy measures that can deliver an imminent peak and decline of greenhouse gas emissions. And we know that substantial CO2 cuts are needed before 2030 in every transport sector, including shipping. And we also know that in order to be aligned with 1.5 degrees, we would need 100% greenhouse gas reductions by 2050. So we'd really be looking at the most ambitious interpretation of the levels of ambition. Next slide, please. Thank you. Yeah. So at its meeting in October, the Intersessional Greenhouse Gas Working Group and the MEPC 73 agreed on an action plan with a number of different work streams. And this looks as follows. So with regards to the short-term measures, MEPC 73 has invited concrete proposals to the next MEPC meeting that will then be further considered and decided on at the following sessions. And it's important to mention that all the candidate measures are still on the table. Furthermore, proposals for mid and long-term measures have been invited to the next MEPC meeting as well, meaning that short, mid and long-term measures, or at least some of them, will be developed in parallel. And again, all the candidate measures are still on the table and nothing has been ruled out so far. The procedure for assessing impacts on states will need to be finalized at the next meeting. And this is important because we know that before adopting a new measure, the impacts on states will need to be assessed and consideration needs to be given to how potential impacts might be addressed as well. Furthermore, at the next MEPC meeting, the fourth IMO greenhouse gas study will be initiated, meaning that the next meeting is going to be rather busy. There's also a work stream on capacity building, technical cooperation and R&D, but that is not very developed yet. And the final work stream is the follow-up actions towards the revision of the IMO strategy, and that will be initiated at MEPC 77 in 2021 and then adopted in 2023. Last slide, please. So the key takeaways for me is that, of course, the initial IMO strategy has sent a very important signal, and that is that the shipping industry will need to decarbonize. But we also know that as ambitious as the initial IMO strategy is at the moment, in order for alignment with 1.5 degrees, we need emissions to peak imminently and full decarbonization by 2050. So we're really looking at the most ambitious reading of the initial strategy. In order for emissions to peak imminently, we will need to develop and adopt operational energy efficiency measures. And in order for the industry to fully decarbonize, a shift to low and zero carbon fuels will be inevitable. So essentially, we need to take highly ambitious action, whilst also taking potential negative impacts on the most vulnerable into account. Thank you.
Thank you very much, Isabel. We are now moving on future fuels, mix and technologies. Although we will be paying a little bit more attention on fuels and in particular on zero carbon fuels and their potential viability, because we believe this is the most relevant topic within the context of low carbon shipping series. So in this first slide, we are showing a potential fuel mix projection and the change required for international shipping to be in line with at least 50% absolute reduction in GHG emission by 2050. And in this case, we are assuming that there will be no increase in IMO minimum ambition in 2023. So in other words, this graph will be the lower bound of what could happen. There are a number of elements that we would like to highlight here. So first of all, traditional fuels such as heavy fuel oil, MDO, will be gradually phasing out, and by 2015 they may represent approximately 20% of the total fuel mix in terms of energy term basis. Another element that we would like to highlight is biofuel and the role that this type of fuel may play. We know that there are some concerns surrounding their sustainability and availability. And this is why in this projection, you can see that their share is gradually increasing, but then it remains fairly stable over time. On the other hand, one of the advantages of biofuel is that they will not require new or more sophisticated technologies relative to the other options. Another element that we can see from this plot is that LNG in this scenario has a very minor role. And we will touch this a little bit more in details in the next slide. Finally, we see also a significant growth in synthetic renewable fuels. So we are referring here to hydrogen, ammonia, but also other electric fuels which are not included in this list, such as e-methanol, also batteries, and as well as hybrid solutions. Some of these fuels will bring with them new technologies on board, especially for the storage and propulsion system. We are speaking basically about fuel cells or more sophisticated storage tank, for example, the liquid hydrogen storage system. And fuel cells that, as I mentioned, I was mentioning before, which can be used not only with hydrogen, but also with other fuels. And also hybrid solution could be also very important because they will have some important design challenges associated, but we believe that they could play an important role, especially over time while we are waiting that a dominant fuel will taking up in the fuel mix. Can you move on? Next slide, please. Thank you. So as I was mentioning before, our analysis suggests that there will be a small role for LNG in a decarbonized shipping industry. And this is mainly for two key issues. The first issue is regarding the reduction of the overall CO2 equivalent. So if we consider the upstream and operational emission, a reduction is not significant relative to the IMO goals. So we are speaking about 6 or 10% reduction. What does it mean? It means that LNG availability, it depends if the required GHG reduction is derived from insect effort or through MBM, enabling carbon market linkage. So in other words, if the industry will be able to buy CO2 offset from a carbon market. In addition to the emission concern, there may be also some economic issues. And these are related to the scale of the investment required for the LNG infrastructure. So in a previous study, we estimated, for example, that the CapEx investment for LNG can vary between $3 or $22 billion in Europe. So if investments are made expecting a great development of LNG market, some infrastructure could become actually redundant. So what this means, it means that the LNG availability is also influenced by whether it's possible to achieve the return needed on this investment over the periods LNG will remain in demand. So considering what we said so far, we believe that in order to decarbonize the shipping industry, so very low zero carbon fuels will need to enter the market. We have already mentioned this type of fuels that we are considering, and there are biofuels, electric fuels, which is hydrogen, ammonia, methanol, but hydrogen ammonia can also be produced from fossil fuels using SCC technologies. So there would be some other production system that will be producing this type of fuels as well, and also batteries and hybrid solutions. All of these fuels will need to have some particular characteristics, and some of these characteristics would be that first of all, they need to be safely adopted and operated. Second, we need proof that they achieve overall GHG emissions reduction, taking into account upstream and operational emissions. Then we need to make sure that this type of fuel are technically feasible. And by this, we mean that we need to be sure that the development of the associated technology will be in line with their deployment. the fuels need to be available, of course, starting from the main routes and then worldwide. And finally, all of this fuel will need to be available from a commercial perspective. And when we say this, we need to consider a different element, different parameters. Obviously, there is fuel price, which influences the voyage costs, but also CapEx, and what we are considering, what we call the storage issues, because many of these fuels have a very different volumetric energy density that will have an impact on the cargo capacity of the ships. Okay, let's move. Sorry. So before moving actually in the next slide, so what we obviously the current understanding of this point is that there is not a clear answer or winner, right? And it is likely that a solution may work for some ship type and may not work from some others. So it will depend from other parameters at fleet level and also geographical location as well. So we would love to go in more details if you would like to address any further question or comment. But because of the limited time here, so what we decide to do today is just to show one example. And the example that we picked is just to show what it means to achieve overall CO2 emissions for hydrogen and ammonia produced from electricity, so with the electrolyzers. So in this plot, what we can see is on a sensitivity analysis looking at the electricity carbon intensity. So on the x-axis, you can see the electricity carbon intensity in a gram of CO2 per kilowatt hour. And on the y-axis, the total annual emission of the zero emission vessels, as well as a ship that runs with heavy fuel oil. The latter is the red line, and is obviously constant because it does not depend from the electricity carbon intensity. But all the other ZEVs, especially ammonia and hydrogen, as well as electric with full electric, all depends from their total annual emission, depends from the carbon intensity of electricity. And what this plot is showing us is the break-even point of ZEV that use hydrogen and ammonia with the conventional ship using heavy fuel oil. So we find that in this particular example, hydrogen and ammonia emit less than a heavy fuel oil ship if the carbon intensity of electricity is below 200 grams of CO2 per kilowatt hour. This also tells us that what we really need is actually renewable electricity to make sure that these fuels are bringing real benefit. This is actually not a bad news, because what we are seeing from other studies that there is the capacity to electrify the energy system using renewable energy sources, and this will be in line with actually the Paris Agreement goal. My key messages here are the following. So zero carbon fuels by 2030 are essential to decarbonize the shipping industry. And we can say also that LNG will not lead to a full decarbonization, and there might be risk associated with this option in terms of investment and cost effectiveness. And finally, action are required today to address the availability and accessibility. When I say accessibility, I'm referring also to safe and technical accessibility to zero carbon fuels. And with that, I'm passing to my colleague Sophie, which will address the finance aspect.
Thanks, Carlo. I'm going to be talking about assessing climate risk in shipping with a particular focus on financial institutions. Okay, so climate risks arise from transition risks, which are the risks associated with transitioning to a low carbon economy, and adaptation risks, and these are the risks from the physical impacts of climate change. In terms of the key transition risk factors, these are the climate policy regulation and changes to demand and supply as a result of transitioning to a low carbon economy. The demand and supply risks stem from both demand destruction of fossil fuels, which would impact primarily the tanker sector, and changes in the supply side from low and zero emission vessels coming online. So far, in terms of the evidence, there's evidence of policy momentum from the IMO's strategy, and also emissions reporting is required from the IMO and the EU to enable carbon intensity and proxies for intensity to be calculated. In the future, we could see fuel and carbon efficiency standards coming enacted, and a carbon price. Evidence on demand supply side changes would be changes in profitability for a ship owner and substitution of conventional fossil fuel ships with zero carbon tech fuels or efficiency retrofits. So all these key risk factors have potential financial impacts. Similar to many other technological transitions, there will be laggards and leaders in the shipping sector, which will lead to a distribution of ship owner costs, both in terms of CapEx and OpEx. This has knock-on effects for asset values, as some ships will become more expensive to operate due to limited retrofitting options, and therefore will receive reduced time charter rates. Devaluations in the future may occur once regulations are more certain and the market starts pricing them in. Some ship owners are already investing in R&D to be ahead of the game and will have an advantage in the market. This advantage is greater the more cost savings are compared to the other ships in the sector. And finally, there may be complications with machinery due to retrofits. In terms of adaptation risks, these stem from acute risks, which are caused by the severity of extreme weather events like hurricanes, and then chronic, more slow burning risks. These are due to changes in precipitation patterns affecting agriculture, rising sea levels, and temperatures. The evidence base for the extreme weather events is already seen through port infrastructure damages. The slower chronic ones would be in the future changes to agricultural trade flows affecting the bulk sector in particular, and new routes opening up from the Arctic Sea passage, for example. The financial implications are that there's port infrastructure repair costs. New terminals are having to be designed to withstand seismic activity. And we may see ton-mile supply changes due to differences in changes in trade patterns. There will be port logistics disruptions, and this will have an effect on supply chain. And ships navigating through the Arctic Passage may be damaged by ice, and there'll be maybe machinery breakdown. But those are very much longer term in the future. Investors are starting to tune into these risks, especially pension funds, insurers, and asset managers, some of which are already bearing the cost of climate change. At the UN's COP24 this week, a record 415 investors managing over 32 million demanded governments take action to achieve the Paris climate goals. There are already several responsible banking initiatives to require investors to assess the alignment of their portfolios to climate change. Some of them also require voluntary disclosure of the financial impact, such as the TCFD. The Poseidon Principles is specifically focused, is an initiative specifically focused on assessing climate alignment of a bank's portfolio in the maritime shipping sector. And that's due to be launched next year. In the transport sector, the recommended way to calculate and report transport emissions is by using both an absolute figure and an intensity measurement. Intensity metrics enable an apples-to-apples comparison between vessels, which have different production units, the ton miles of each vessel, and they also allow for tracking of progress over time. So this graph shows you how to measure climate alignment using carbon intensity as the performance measure. Alignment requires comparing the carbon intensity of a vessel, here shown in the green and red dots, to a decarbonization trajectory, the blue curve. The red dots here are misaligned, and the green dots are aligned. And the alignment delta is the percentage difference between the vessel's carbon intensity and the required carbon intensity on the blue curve, so the trajectory. The important thing to note here really is that alignment, so the delta here, is in shipping is not the same as the risk exposure of the vessel. This is because carbon intensity for a vessel is a function of speed, technology, and utilization. So there are a number of confounding factors, and speed and utilization can change over time periods due to the commercial operations of the ship. But it really is the technology's potential to switch fuels to a lower carbon factor at a low cost that creates financial risk. Some ships can switch fuels more easily than others, and because of the long asset life of vessels, the type of tech that is chosen today will impact future risks and opportunities. Okay, so we've talked a lot about risks, and now moving on to opportunities. I just wanted to highlight one of the key opportunities, specifically around green finance in the shipping sector. Green finance in shipping started with partnerships between banks and nonprofit lending institutions. Here I've just shown one example, the partnership between EIB, European Investment Bank, and ABN and AMRO. It's just one partnership of several through the EIB's Green Shipping Guarantee Program. The program is designed both for fleet renewal and retrofitting of ships, and the reason behind this program was that the EIB received a clear signal from the market that there was a financing gap for the greening of shipping fleets. And then just in terms of the green bonds, they are really a growing area in ship finance, whereby ship owners are financed through the capital market instead of traditional lending. Earlier this year, NYK, a Japanese shipping company, issued the first green bond in the sector. So the proceeds of the green bond were used to finance LNG-fueled ships, ballast water systems, and scrubber systems. But as renewable alternatives start becoming available and viable for long-haul shipping, new green bonds in the shipping sector will have to offer higher standard of GHG emission savings. So one initiative is the Climate Bonds Initiative, which is setting up their own criteria for evaluating green bonds. Just some key takeaway messages here. The risks that we've discussed stem from transitioning to low carbon economy, so changes in technology and due to regulation, and the physical impacts of climate change. And they both have considerable financial impacts on the maritime sector. There are many investor-led initiatives, but not yet specific guidance on measuring climate risk for shipping. And finally, green bonds represent a really good opportunity for ship owners and investors, and is still very nascent in shipping.
Thank you very much, Sophie, Carlo, and Isabel, for providing some food for thought on that regulatory, technological, and financial risks and opportunities. I'd like to conclude with a few key notes that I've taken from your presentations. What's clear is that there's been a storm of change, and the rapidly evolving landscape is only likely to continue as we experience more of the fundamental threats that climate change poses, as we see more alignment politically on decarbonization and further evidence of the commercial and technological solutions to achieve it. So that's clear. From the policy perspective, I felt that the risks of 1.5 degrees regime could be the most profound, as it would mean that short-term measures such as tighter operational standards would have to be implemented only in a couple of years' time. And likewise, in order to be aligned with the 1.5 degrees target, the sector would have to achieve 100% GHG reductions by 2050. So the most ambitious interpretation of the levels of ambition from the initial strategy. And this may be achieved through market-based measures, such as carbon pricing, that would likely have to come in the next 5 to 10 years, and therefore impact ships being built today. From a technological perspective, from Carlo's presentation, I thought that the risks of investing in LNG were very clear. Even in the best case scenario, for example, controlling for methane slip, it just won't deliver on the IMO GHG targets and is hugely reliant on action from other sectors for offsetting. On the other hand, I thought there was a balance of risks and opportunities in the low carbon technologies. So there was a bit more risks and opportunities to be had there. On finance, from Sophie's presentation, I could spot that there are risks from proliferating number of investor-led initiatives, which will only lead to more scrutiny of investment decisions by ship owners. LNG is a case in point. On the upside, though, it was good to hear that there are now opportunities beginning to emerge from external debt finance, which will enable cash-strapped ship owners to tap into a larger pot of external debt finance. A multi-billion-pound cash machine, more likely. If that's an accurate representation or a good summary of what you've said, should we move on to question and answers? Okay. Sorry that we've got very few minutes for question and answers, 10 minutes. Sorry, we had said 15 minutes, but we'll try and see as best as we can to try and answer your questions. Okay. I'll just pull up the questions.
Nish, if I may just jump in, Isabel here. I've seen previously in the comments that there was a question on why we didn't mention wind propulsion specifically. So I just wanted to clarify that wind propulsion we consider wind propulsion as one of the ways to improve energy efficiency. So it's included in the slides, and it's definitely or could be part of the solution. But yes, point very well taken that it hasn't been mentioned specifically. So this is something that we should probably do going forward.
Yes, if I can follow up on this, Isabel. You are right, we haven't explicitly mentioned this, but I was referring several times to hybrid solution. And when I say hybrid solution, it includes also zero emission vessels that implement also wind assistance technologies.
Okay, we've got an interesting question here regarding what needs to happen wider from the shipping sector. What ports need to do to enable this transition, and what support do they need from the government? Carlo, I think you'd be best placed to answer that.
Ports obviously are very important, and because this is where the infrastructure needs to evolve. And I think that at the moment, ports are paying a lot of attention on air quality. And I think that at the moment there should be more focus also on GHG emission reduction, and possibly thinking about what is their strategy, what might be their strategy if they want to resolve both problems, air quality and GHG emissions. So again, this is also linked to the LNG discussions. So if ports are investing in LNG to resolve air quality related issues, they may need to think what they need to do with that infrastructure in order to then meet, in order to resolve the GHG emission reductions. Obviously, there is a need for ports of increasing the collaboration with the fuel supplier, as well as ship owners and shipping company.
Okay, thank you, Carlo. There's another question which is around policy and what other policy instruments would likely enable us to switch to zero emission vessels. I think I alluded to carbon pricing being one of them. Isabel, do you want to add any more onto that?
Yeah, so that would probably fall under the mid and long-term policy measures, and those aren't very well defined yet. At the moment, there's talk about an implementation program for zero and low carbon fuels, but it's not very clear what exactly that could mean. There are some ideas, especially from the shipping industry itself, that there could be a fund generated through contributions from the shipping industry, and that this fund could be used to invest into R&D into low and zero carbon fuels. Another idea that's starting to be floated around is the idea of a fuel standard, mandating, for example, the carbon content of the fuel. So that could be another way. But I think R&D will be key. So thinking about how to trigger investments into R&D for RD&D, I should say, so research and development and deployment of low and zero carbon fuels will be essential. And I think in this context, the national action plans could actually be quite helpful as well, because they will pull together various stakeholders that at the moment might not be very involved, including, for example, from ports, and mobilizing resources at the national level and generating best practices and lessons learned that can then be transferred to the international level as well.
Thank you, Isabel. I think there was a direct question on the percentage of transport work that we are assuming in the CO2 intensities that we are calculating at the per ship level. I believe the answer to that is around 3%, so an increase in transport work by 3% per annum.
Maybe just a follow up on this. Obviously, this is the assumption that we have used, but one important thing that we need to highlight is even if we would change this assumption and we use other transport work, what we are seeing is that we still need a major shift to other fuels if you want to achieve the IMO goals.
We've got a question here on Poseidon Principles. I believe it's a new initiative and people would like to know a little bit more about that. Sophie, would you want to explain a little bit on that?
Yeah, sure. So this is came about through a number of workshops between banks and ship owners, and essentially it's around a risk framework for due diligence of bank portfolios shipping loans, and it's still very much in draft form. It's expected to be launched next year, and the focus is primarily on assessing climate alignment of a bank's portfolios and the financial products.
Thank you. And Isabel, I captured something earlier from your slides around impact on states, and having followed the IMO discussions closely myself, do you want to perhaps say how these negative impacts, for example, could be addressed?
Yeah, thank you, Nish. Yeah, that's a really good and I think tricky question, because at the moment, while there's a realization that impacts on states absolutely need to be assessed and addressed, we don't have a procedure for that so far on the assessment side. And the discussions, at least at the IMO level, on how to address potentially negative impacts hasn't really started. Having said that, some discussions are starting to happen in the background, and I think there are a couple of potential ways that negative impacts could be addressed. And the first one being to make sure that negative impacts don't happen in the first place through preemptive measures. So, for example, one could exempt certain routes or ports where it's shown that impacts would be disproportionately negative, or certain cargo types or low cargo volumes could be exempted, certain ship type, size or age categories, or we could be looking at phased implementation. Then I earlier mentioned the potential to create a fund either through contributions, mandatory or voluntary, or carbon pricing mechanisms. And this fund could then be used in various ways. So, for example, to reduce some of the negative impacts from occurring. For example, any increase in transport costs could be mitigated through port investments, as a better port infrastructure and efficiency has been shown to have an impact on transport costs. Or it could be used to support countries' general climate change mitigation and adaptation plans, or to support the decarbonization of the maritime industry in general. And that's also something that I mentioned earlier. And of course, one thing, and I haven't mentioned this explicitly in my presentation, is capacity building and technical cooperation, which is part of the list of candidate measures. And that, of course, is something that, yes, is absolutely crucial for the success of the strategy.
Thank you, Isabel. We'll just take one more final question from the attendees. Except ammonia and hydrogen, they are asking whether there are any other potential zero-emission fuels that could be used in the future.
Yes, we mentioned a few of them, and there is hydrogen, ammonia, obviously, but also methanol could be another option. And in the other, biofuels or synthetic electric or family of fuels that is called electric fuels. But I think the question is more, I'm sorry if I'm answering with another question, but I think the question would be like, when we need to adopt which zero carbon fuels. So what I'm trying to say is that it's important to understand that the evolution of the fleet towards zero emission vessels has to be done in a way that is aligned with the evolution of the global energy system and how we are producing such type of fuels.
Thank you very much, Carlo. And with that, I think we'd like to conclude and wrap up the discussions today and the presentations. Thank you very much to all the attendees who've tuned in from far and wide. And I'd just like to apologize that we didn't get much of the time for answering all your questions and we had to skip a few. But if you would like to get in touch, please do get in touch with us directly here on these emails, and if you joined slightly later or were experiencing problems with sound, we will have a recording that we will send out in the follow-up email to this. Once again, thank you very much for everyone tuning in, and to my panelists here. Thank you.
Thank you.
Thank you.